for the day, 87% winning. I am scalping, so this is the kind of win rate that you need, and it's the kind of win rate that you would expect from a scalper. So, you know, really good. I have 100% days. I have days where I take 20 trades and I never lose. And those are typically the trending days where it's just so obvious that you should be long or short. But I still scalp it, and I have been for weeks. I'm terrified of this market right now. I don't know why it's doing what it's doing, and I can't trade it with the conviction of the people that can create these big bars. So I'm scalping it. I like a lot of reassurance when I trade. I like to get a profit, get out, get some more reassurance, get back in. What's up, guys? Welcome back. It's Jay. I wanted to give you a little synopsis again of the video so you can decide if it's worth your time to watch or not. I did that yesterday. I got really good feedback on that. You guys appreciate that. Like I said, I don't like to waste people's time. But this video, it's about 3 trades. The first trade is about 30 minutes long, maybe 35 minutes long. And I'm in a drawdown in it, and I add to it, and I'm telling you why. I'm giving you the reason why I'm adding. I'm giving you, you know, all the things that I see on the chart. I show off another indicator, a custom indicator in here that I made, tell you what it does. I talk about ranges in this video. I talk about how the market is in ranges most of the time because the market's job is to facilitate trade. Okay, it wants to be in the spot on the chart where the most people can interact the most. And that's in a range. You know, you're going to get a lot of trading done in a range. And that's why the market ranges most of the time, because it's looking for buyers and sellers to match up. When you're trending, the market's one-sided. It doesn't have that match. That's why it goes in one direction to find the other party. So I talk about that. We talk about stats as a scalper. You know, what you need to have to win. You kind of saw a little bit of that here. I do go over the week. I talk a little bit about the trader's equation and how you're always trading off probability of a successful trade for risk reward, and how adding, you know, scaling in increases your probability, but it also increases your risk. So you're still in that trade-off. I talk about scaling in. I talk about why I do it, and you know, why it's profitable for me. I talk about actual risk. That's the risk that you take in a trade, you know, before it goes your way. So you buy some and it goes 10 points against you before it goes 20 points for you. Your actual risk was 10 points, but your risk that you decided to risk to a swing low or whatever might have been different. So I talk about when to use those, when to think about those, and when to go for a swing profit instead of a scalp. So all in all, pretty well rounded. Like I said, I put it on 2x speed, watch it through, and see what you get out of it. If you could give me a like, or you have a question, a comment, you know, I always try to answer comments, but I make these long videos, you know, I'm actually trading when I do them, and then people will come in and ask me questions in the comments, and had you watched the entire video, the answer to your questions in the video. So I can always tell who's just skimming it, and I'm not mad about that. But if you really want to get better at trading, you need to watch a trader actually trade, okay? And that's what I'm trying to do for you guys. So give me a thumbs up. I'd appreciate it. And I'll see you in the next one. All right. Welcome back. Welcome back. Traded a little bit in the overnight session. Actually traded a lot. I was up to 3 in the morning. So it's about 11. Oh, it's 11:11. Make a wish. So missed the open. Doesn't look like I missed too much. This was easy money though, but we've kind of once again fallen into a range. This is the top of the range, and we're in a channel inside the range, and the channel looks like it's breaking down and retesting. Yeah, that's definitely a range there. I don't know if this is the bottom of the range or this is the bottom of the range, but for all intents and purposes, it doesn't matter because this is the top of the range, period, right here. So more inclined to short here than buy. We got the bottom of a channel, and we got the top of a range. So there should be some resistance up here. There should be people willing to sell up here. Let's see where we've come from though. Let's look at the 30-minute here. I like to use the 30-minute lately as a line graph, just to show me closing prices and show me where we are. We're below the moving average. For the last 20 periods, we're minus the cumulative NASDAQ top 8. We're minus 147 points from 30 minutes ago. The last bar, though, for the last 30 minutes, we've been going up because we're plus $6 from what it was on the last bar. So here at the moving average, this is not a very good bull signal, but they're taking it as one. This is not a good bull signal, so I'm going to take it with them.
Order filled.
Let's do one, and then if we get the opportunity to go long or to scale in lower, we will. I don't think there's any news coming out. I don't think there's any we've got unemployment claims tomorrow morning. It's really nothing else. Some Fed member I've never heard of speaks at 3. So nothing that should move the market, but you know, doesn't mean nothing will happen. But we're looking at ranges. This is also a range, it looks like. We've come to the top of it once. I said I was more inclined to short, but then they took this as a buy signal, so I bought. But it looks like maybe shorting was the right thing to do. Let's see if there's follow through to this, to the top side, and then we'll buy another. I'm actually going to put one down here. I think we're going to play this bar again regardless. I have not added to this yet. So let's put a sell order up here. Just a quick scalp is what we're looking for. Let's see what happens. All right, so they took this as a buy signal, and I guess depending on how you draw that, that's a retest. So we could be going lower here. Definitely losing companies. Definitely losing companies here, but this is the bottom of a range. So we're negotiating this range right now. Until we break this range significantly, I'm going to be looking to buy it. So I want to break and close below this range, and then I'll think that we are going short. But right now, I should really be trying to play this bar again with a an add-on to my position, but I'm already not in profit on this, so I'm going to wait to get a better fill down here, and I might even buy 2 down here. So let's see if there's follow through into this red bar. Move this a little lower here. This is the low of the range right now, high, and now we're in the bottom, say 20%. Looks like the companies are, I mean, Amazon's flat, Microsoft's rising, Apple gap down, but it's halfway through its gap now, about 40% through its gap. Meta is, I'll show you what I'm looking at here. This is another indicator. I didn't explain it yesterday. So it takes the last 20 bars and it tells me what percentage of them were red and green. It's just a quick way to look at, you know, when I'm looking at these badges, which of the 8 are trending kind of bearish. So I've got 3 of the 8 right now that are bearish over the last 20 bars. They're below the moving average. So a lot of red bars here, though. I think I might have to get out of this, actually. None of this looks good here, but bottom of a range, I think we'll at least have a bounce to the middle. So if I buy a couple here, I can get out at break even. I should have bought that. I am going to buy that.
Order failed.
And I'm going to move this down a little bit more to maybe the midpoint of this candle here. These white dots on the chart are the midpoints of the candles. Just put them there because they're easy to see. So this is a nice trend bar here. This was not a good signal, but they took it and they went down. This was not a bad signal going up, but they didn't go up with it. So we keep getting follow through to the downside on good and bad signal bars. That's something we got to think about. This here, though, is not a good bull bar, and they're buying it. You see that? We're starting to buy it up. So confirms the trading range, but can we get back up to where I need to be to get a profit is the question. Or are we going to keep peaking below? But we saw some buying at the start of this candle here. We're in a range inside of a range here. I'm convinced this is a range. It'll be confirmed if we go back up to test this again. So we're just looking for a scalp. If it doesn't look like we're going to get it, I'll try to get out of the small loss or at break even if we get closer to this. You can now put a trend line on the top of this right here. Microsoft's pulling back. Apple's pulling back above its 20 though. Microsoft is just breaking its 20. Nvidia is breaking its 20. It's not as strong as it was yesterday. We're not expanding the range below this. That's interesting right now. Put this at the bottom. Wrong there. The bottom Bollinger Band. This looks like this is a channel down here. It could turn into a bull flag, but we don't know yet. Let's see what it wants to do here. So they took this as a bull signal or as a bear signal. It was a bear signal. They took it as one. They tried to buy it though, so that's what's giving me a little hope I can get out at break even here. Let's see how this channel works, and let's see how this Bollinger Band works. We're below this channel. This will be another great place to add on, but I'm already 4 times what I wanted to gain in risk, so let's kind of cool it and see what we can figure out here. The ADD is coming off. We're down 1,500 companies. Started at negative. Looks like we started at negative 1,800, so we're up 500 companies. We rallied to negative 11 plus 7 on the open, and now we've just been in this range and trending down since the open. So I think there's more buyers below, especially in this area here. So let's just see what happens here. So the thing with this style of trading is whenever you take a trade, you're always doing an exchange between risk reward and probability. If you have great risk reward, your probability of the trade working out is not very good. So if I were to short at the top of this channel, if I were to short here, like I should have, it looks like my risk reward would be, this part would be the risk right here, because I would put the risk above this high. So the risk would be 29 points, but the reward, if I wanted to go down to the channel, would be 116. But what are the chances of it falling all the way down here before it goes back up here? Well, it's a smaller chance. So the probability of that happening is low. So you're giving up probability for risk reward and vice versa. When you scale in, you're increasing the probability of the trade working because you're improving your positioning. Okay, so adding to a loser, scaling in, whatever you call it, you're increasing the chance that you're going to get something that works. But you have to know when to cut it. So that's where you use technical analysis. That's where you use your chart reading skills to figure out where you're absolutely wrong in the trade and cut it. Because when you're scalping for so little, you can't really take $100 losses all day. Now, what'll typically happen is I'll get a nice trade like this, and it'll just go, right? And I'll get, a profit that's $200-300 on a spike, and I'll take that profit because I was only looking for 25, obviously. So if you give me a bigger profit than that, I'm going to take that. They're using this as a buy signal now. I kind of want to buy down here again. Let's see what it looks like though. I think they'll reject it again. So it's above the midpoint of this candle here. The other companies are responding, or the big companies are responding, I should say. Okay, so they're aware of this channel right here. They're aware of this channel line. They reverse right at it. They're aware of this range. Maybe they're aware of both. Maybe they're only aware of one. But you don't have to see all these patterns to make money. You just have to see one and trade it, because they're either aware of it and they're using it, or they're not. So I'm a trend line aficionado. So I notice a lot of patterns because I traded with trend lines exclusively for the first 2 years of trading. So, I can make any pattern out of this. There's a wedge right here. 1 push, 2 push, 3 pushes down. It's a channel, but it's still a wedge. So they tried to use this as a buy signal. It did not. It looks like it's failing. So it was a breakout test of this high, and it failed. So far, I got 2 minutes left. It could come back up here. But it just shows me that they're aware of this right here. So I should be trying to get out somewhere around here at the top of this channel if I want. If I think we're going to get there, because they're definitely aware of this channel. Trading range bar at the bottom of a trading range at the bottom of a channel, which is just a downward sloping, trading range. So trade them the same. I should be buying more here. I actually am going to buy one more here. You just need to pop up to the top there. We're not that far away. But now we really got to consider how we're adding on here if we want to continue to believe in this trade. But the down trade was definitely the best one. This retest here is kind of what I should have taken as a sign that we're going to go back up. And then this inside bar and then outside bar. So, but we may be seeing a test of this midpoint here. So let's see what happens here. But yeah, getting back to what I was saying earlier, when you're scaling in, you're giving yourself more of an opportunity to win the trade because you're improving your position. That's what most people don't understand when they say, oh, you're adding to a loser. I never add to a loser. If the trade's not working, it's not working. Well, when you trade just one contract and it's a big one, you're putting a lot of pressure on yourself to be absolutely correct in that moment. It can't move anywhere but in your direction because you can't handle any kind of pullback or drawdown. And over the years, I've realized that's just not how I trade best. I'm not super precise. I have an idea of an area where something's going to happen. And then, you know, it comes down, it penetrates that area, it plays around below it a little bit, and then it comes back through it. So watching that happen enough times as a trader, you realize that maybe you should start out a little small. Maybe you should take, you know, scalp profits when they're given to you, and then, you know, occasionally you'll get a big runner where you can hold on and add on the way down. But expecting you to enter and the market just agrees with you, like, yeah, this is the direction that we're going to go with this now, it's unrealistic. So I'm more apt in the scaling in. And what I'll typically do is I'll define my risk with a box. So if each of these is 2 points per $2 per point, I'll say a 50-point box. Okay, I'll show you here. 50 points here, from here to here. I'll draw a box around it. And I'll put this as my catch-all. So I know that every contract I add inside of here, it's going to be a $100 loss. Okay, it's going to be a $100 loss for every contract I add. So if I get up to 10 contracts, I'm going to lose $1,000 down here. Now, who loses $1,000 trying to win 25? Not me, right? But if I believe that this swing is going to lead to a bigger swing, I might put 5 or 6 contracts in this box, 6 or 7 sometimes, and I might do it down here. So if I'm buying 3 contracts and I buy 3 up here, and then it falls all the way down here, I'm going to be short. Okay. Hold on, seeing what it's doing here. I'm gonna be down money by the time I get down here. But what I'll do down here is I'll add on, you know, pretty aggressively down here, and then that will pull my average price to around right here, and then that expands my box, right? So, and that I use quite frequently too, because putting the pressure on your skills to be spot on, it's just not realistic. So that's why you see me scaling into a lot of these trades and them going into drawdown, because I just have an idea where the market's going to do something, but I don't control the market. I don't know what's going to happen next. Only thing that I have after I enter a trade are my abilities to read price. Like, they've got 2 big bear bars and the bulls decided to buy. I don't know why. I don't know who they are, but they failed. They failed above this and came back down. They should have enough strength to get below this low and continue the trend. But if this turns into an inside bar, I'm more apt to buy again, because that increases the probability that we're going to go up. When the driving force can't extend the range below the low, you know, that tells you that they're a bit weaker than the counter trend. I am trading counter trend because this looks like this is turning into another trend. It's a pullback that's gone on for 1, 2, maybe got one more leg down, so a wedge, and then we might just shoot up to the top and take out these highs. So let's see what happens. The sentiment today is not great. All of these companies for the last 20 bars on the 2-minute chart are now red. Only one that is green is Apple, and it is the biggest, but it's pretty low. Let's see. Bulls can give us one of these bars here. That would be one to get out on. But last time they took it as a sell, so I don't expect there to be any continuation above it. But the fact that this is a trading range, looks like it may turn into an inside bar, and they're trying to buy it here, shows me that the bears are weaker along this channel line and below this range than they are up here. Pull back 30-minute here. So this did turn into an inside bar. It did, no, it's outside. It broke the low of this. I didn't see that. So it broke the low. But they're buying it. They're buying it. The bulls have decided to buy it. So let's see what happens here. Typically, if you can get back into a range after you've closed outside of it, you're going to go back to the other side of the range. So they're having trouble getting back into this range here, but it's a zone, so. They took that as a buy signal. Looks like it's failing. It's failing at to close above the midpoint here. We can get a bar to close above this midpoint. We're probably going to get a second bar. Got another failure here. So you're noticing a pattern now since I've sat down, since I've started recording. They're selling the tops of bars. Bears are. Okay, this one sold the top of this one. This one sold the top of this one. It was a while back, but it was the top of it. And that's how they've been making money all day. So when you see them start to decline selling the tops of bars, that's when I should really get more aggressive and add on here. But I'm going to move this down here. I don't like them being below the midpoint of this big bar here. Kind of makes me think they're going to come down. Like there's no good place now. Okay, they just broke this low again. It's kind of climactic here, especially falling out of a range. But everything's falling out right now. This is the 50% of this move up right here, of whereabouts. getting some support down here. So at one point, this was a big red bar, you guys saw it, and they didn't want to continue that momentum. Instead of it enticing sellers to sell and fill this out, it enticed buyers to buy. So let's see how this develops. This could be a doji when it finishes here. See if it shrinks this body. If it shrinks this body or turns green, I gotta buy again. Below the midpoint right now. So because they've been selling the tops of bars and not getting a lot of stop activity, so they didn't really sell aggressively below here. They sold for like 9 points and then they gave up. And now we have another inside bar. And you really want to see them, the bulls stay, if you're long, and I am, you want to see the bulls stay active around this, in these wicks here. Still in this channel though, you see that we broke below the channel and came back out, so still in a channel, but this range looks like we don't want to get back into the top of this range. My order is right here at the top of this range, so if I wanted it to be lower, I need to add on aggressively here. That's going to put me in a lot of risk, so I'd definitely be going for more than a scalp up, but there's no need to buy unless there's bearish or bullish strength. Bullish strength would be an inside bar, it'd be a green bar, even a tiny green bar, and it would be a close above the mid of the previous candle. None of these have done that. This is the midpoint of that, close right below it. This is the midpoint of that, close right below it. This is the midpoint of that. It's like we're negotiating it now, and this is the midpoint of this candle. So looking for a bar with a body above its midpoint, closing near its high, and then we'll consider adding on down here for a retracement back to the top of this channel and into profit. This is a trading range bar. Bulls are using this as a signal. It's not a bear, it's not a bull bar, but they're still buying it. So there's some activity here. It's more two-sided than it looks, and I know as soon as I exit and sell, it's going to rebound. Another good thing about scaling in is you really give your trade the opportunity to play out. I've lost big scaling in, everyone has, but I think I do it better now than I ever have. I start out smaller and then I don't get as big before I say okay, enough. But you really get better at judging whether you have what it takes, because when you go long or go short and put your stop above or below a swing low, or some random stop, maybe you put it in between here and there, whatever your stop criteria is, when you put it randomly in places, you kind of are giving yourself, you're doing yourself a disservice, because how many times do you see the market do something else before it does what you think it's going to do? It's like, okay, that's great that you think I'm going to do that, but I'm going to do this thing first, right? And then you get out of the trade and then your trade plays out. when you start to scale in and you do it intelligently, like I said, I would add on if this bar of the midpoint and it was green closing at its high. If this bar closes here, I'll add on, even though I'm close to, I'm below my average order point, because it's giving me another reason to add on. It's shown me bullish activity. It's strong. And even if this fails, it'll tell me something about the market too. It'll tell me that the bulls are at least trying. Okay, and then it's not just clear cut and dry that you're going to keep seeing bars like this. So that was not a bad close. I'm going to buy that.
It failed.
I'll buy that close. This is downward sloping, so they typically break to the upside. That would be nice. But, it could come down here again before it decides to come up here and test this. And it could not break when it comes to test it. It could do one of these and fall back down. But based on the strength of the retest, I can tell whether I should hold or whether I should get out at a break even or a smaller loss, or whether I should get out at a profit. The bulls took this bar as a buy signal. They have now a proper buy signal, so they really need to trade above this, which they just did, and they really need to take this as a proper buy signal. And get out at a smaller loss than what I have been drawn down at, but it's looking like it wants to go my direction now, so I think we'll get to break even and probably a little more profit than I usually take on these. When I have a larger drawdown, this is another thing. When I have a larger drawdown than I anticipated, like I think I added on here, or I started the trade up here, and then I have to suffer a leg down. When I finally get a leg up, I tend to want to get my full risk. So if I had to risk 47 points to the downside, I'm typically looking to get half that to the upside, because the retracements, the waves are typically half of what they are. So I'm in a scalper's profit right now, what I like to take. Let's see if it'll give me more. 51, so that's double a scalper's profit. That's almost 2, but we're at the top of this channel now, so I should be looking to sell this. Should be looking to get out of this, at a profit. But I think it's going to give me a little bit more here. I'm going to get out of that. Okay, so we're at the top of this channel and we have the 20 right here. That's the only reason I sold that. But what I was saying was I typically want to, there's two risks in your trade. There's actual risk, and then there's the risk that you've defined. So if I buy, let's say I bought right here at the top of this channel. Let's say I didn't know there was a channel here and I bought. We know I knew there was a channel here and that I should go short because I said it in the beginning and then it went long. Okay, but let's say that I don't know anything about it and I go long here. Okay, which I did. I go long here because I see a big green bar, which is not a bad signal. You want to be going long, when you see the other side active, when you see your side active. So I go long here. And then I get this pullback all the way down here. And I add on, let's say I don't add on, let's say I go long here and then I don't add on until I see another green bar closing above a red bar, or closing at its high, or closing at its midpoint. So I add on here. Okay, I add on aggressively here. Let's say I bought 1 here and then I buy 2 here. That's going to move my average price. This is the midpoint. But since I'm buying 2 down here, it's going to move my average price to probably about right here. Okay. So I'd have pretty much the same position that I had when I added down here. All right. But because I've had to suffer 32 points in drawdown, I'm not going to be looking for a regular scalp out. I'm going to be looking for at least 15 to 30 or 15 to 20 points to the upside from my position. So let's just put this on here where my position would be, about right here. And we're going to see if I'm going to make this line a different color so you see it through all the noise here, through all the drawings I have. Let's make it black. All right, so I bought here. Or my average position is here, and this is about half of the range that it made me suffer to the downside. Okay, this is nice follow through. I like that it's above the channel now. This could be a breakout, but it could also be a failure. So let's see if the bears take this as a bull signal or as a bear signal and they come back through here. But typically I would take this as my new stop. Let me just show you here. So once we get out of this box right here, that would be the whole trade. But because we're at the top of a channel, because the moving average is up here, I was more inclined to just take that little profit there. I want to enter another scalp here. I like what they did here, and I'm actually going to buy 2 right now. I think we're going to get up there.
Order filled.
Bulls look like they're taking their buy signals, so I think there's another few points in here for me on this. Don't want to see them reject this. Almost there. There we go.
Order filled.
We're going to take that. So you've seen 2 scalps here, made about 70 bucks overall. One was 40, one was 25, maybe like 65 bucks. So as you grow the account, and you get more money, maybe from working or whatever you do, instead of starting with 2 contracts and going for 25 bucks, you start with 4 and you go for 50, because now you have the drawdown that can handle, 4 contracts going against you at the start. You saw I started that first trade with just 1 contract because I told myself right here that I should be selling, because we're at the top, near the top of a channel, top or bottom of a trading range we just broke out of, and then I bought instead because I felt we would come up here to test this. We didn't. Looks like we may be trying to do it now, or this range could break down also, and then we could continue back into the range. But like I said, typically earlier, when you get back into the bottom of a range like you are right here, you typically want to go back to the top of the range, and this was a range before. So I think they're going to want to come and test the top of this range, and they're almost to my swing profit of actual risk. I don't think I finished what I was saying on that. So you have actual risk when you hold a trade and then it starts to go against you and then it rebounds and comes back up. The amount it went against you obviously was your actual risk. That's how much you actually had the risk. If you bought here and you went down to here, you actually had to risk 50 points. So you should be looking for 25 to 30 points. And I think I'm at 20. So let's go to 25 points and let's expand this and let's see if it gets there. Let's set an alert right here. They're using this as the bears are using this as a sell signal, and it's at the top of this right here. This is the bar trying to reclaim the 20. This is the 20. It's not happening. This is not a really good not a very good bull signal right here. It's a trading range bar. The tail is a little bit bigger than the body, and they did not close below, but look at them buy it up anyway. So when you get signals that are not looking great and they buy them anyway, that tells you a lot about how the market participants are seeing this price. Right now, the market's always searching for a fair price. It's searching for the price that the most people want to trade at. So when you see a trading range, that's what the market wants. The market wants a trading range. Okay, because it's going to facilitate the most trades in a trading range. The sellers are going to initiate shorts and buyers are going to get out of longs at the top, and the opposite will happen at the bottom. Buyers will initiate more longs and sellers will get out of shorts at a profit, right? So the market wants a trading range most of the time, and that's why, I don't know the exact statistics, so don't quote me on this, but that's why 70 to 80% of the price action is trading range. Okay, it's just ranges in between trends. We range and then we trend. You know, we range, broke out for a little bit, came back into the range, broke down, came back into the range up here. Okay, but in between this range, this upper range, you had a trend. This is more trending than ranging. But the market wants to range. The market wants to range most of the time because it's getting off a lot of orders. It's very happy when it's in a range. So it's important that you learn how to trade them, because the trending is when they're searching for their happiness, in my opinion. They're kind of searching for the fair price. So you get down here, there's nobody else that really wants to sell down here. The buyers start to buy and they go in search of sellers. And they just keep buying until they find sellers. Where sellers were they're above where they sold last time in this case. So not always. That's why we have breakouts. But now they're above where they sold before. So they found adequate sellers. Then they'll drift down until they get there. This might be hitting my target here. My swing target right here. So we did get a downward sloping breakout to the top. But yeah. So actual risk and the risk that you defined prior to the trade, they're both something to look at, because it can also tell you how wrong you are. If I continue to take trades and they continue to draw down 50 points before they go up and I want to go long, I'm 50 points out of whack with the market. That's how I'm looking at it. Because I had to suffer a 50-point drawdown before the market finally did what I wanted it to do. Okay? And that's not, something that you can do regularly, especially if you're scalping. You want to be right quick. You want to be right often. You want to move on. So getting in a huge drawdown or getting in a battle with the market when it really just wants to range, it doesn't want to trend, is never a good idea. But it looks like it hit my profit up here a little bit before, but I think it will. Show you my stats for the day and then we'll get out of here. So right now for the day, 87% winning. I am scalping, so this is the kind of win rate that you need, and it's the kind of win rate that you would expect from a scalper. So, you know, really good. I have 100% days. I have days where I take 20 trades and I never lose. And those are typically the trending days where it's just so obvious that you should be long or short. But I still scalp it, and I have been for weeks. I'm terrified of this market right now. I don't know why it's doing what it's doing, and I can't trade it with the conviction of the people that can create these big bars. So I'm scalping it. I like a lot of reassurance when I trade. I like to get a profit, get out, get some more reassurance, get back in. Let's look at the week here. This is my weekly win-loss. You can see that it is higher than my daily right now, a little bit. No, daily's higher. But, you know, below 75%, it's really hard to make money scalping. So you get a high win rate percentage because you're taking very quick pops. But this 12% or this 20%, 19% is what I have to worry about. It's what I'm always worried about. So I try to take a little bit more when I'm right than I lose when I'm wrong, because I'm going to lose, but it's going to be infrequent. But I can't let the losses set me back, you know, an entire series of trades. So I try to think of 10 trades at a time, and I can't let the loss set me back. Damn near 10 trades before I get my next winner, because that's not going to be a profitable trader's equation. So it's Wednesday. We've had a day that we closed. Let's see where we are for the week. This is where we are for the week. Commissions aren't bad. I like to keep them below 10%, but I am trading micros and I am scalping, so you know, it's kind of commission hungry. I don't mind that as long as I make money at the end of the day. This is a week here, so we're halfway through the week, and I've only traded 2 days. We're up 500 bucks. Doing exactly what I'm telling you right here. Okay. So that's all I'm going to post today. See you guys tomorrow. Give me a like if you're enjoying these videos, guys. I don't post a lot of content. So like I said, I don't make my money from YouTube. I make it from trading. So I'm not posting a ton of content, but I think it's important to see different styles. I think it's important to see how people are looking at the market. So if I'm in the mood, I'll put something up. So if you're in the mood, give me a like, and I'll see you in the next one. Peace.